I'm with Steve Okun, Senior Advisor for Asia at the Global Private Capital Association. Steve, when we look at the similarities of investing in China and investing in the US, they both have challenges with concentrated power and challenges in the AI sphere. Which would you favor for a longer term investment?
It really gets down to the very specifics that you're looking at. Where China really has an advantage right now is what we refer to as physical AI. And that's bringing, all of that power of artificial intelligence through the LLMs and the other type of software and marrying it up with their robotics. And when you bring the AI into the robotics, that's where China really can be moving ahead. So that part of it, you're very much watching what happens in the physical AI world. At the same time, the innovation still continues to come, not entirely, but quite a bit from the United States. So there is still a lot of investable companies in the AI space. And the United States is going to have to catch up to China on robotics as well. So there's opportunity in the United States too. So what makes the investments work in both is the competition. It's the competition that you're going to have between the US and China. So there are times when the US and China are going to be adversaries from a national security perspective. You're going to have to keep that in mind when you're investing, but then you also have to see where the opportunities in both economies are.
As well as these market forces which you're talking about, Steve, China in its formula for success has an element of communism and an element of Confucianism. Can the three of those coexist side by side for an innovative, future-proof economy?
It has. It has worked. All you have to do is see where China has come. And part of that is what's causing some of the tension as well. So you have to keep both of those things in mind. But you look at what China does. When China sets its mind to something, and I mean China, of course, talking about the Chinese government, the party. So for example, back in 2015, when they recognized where the economy was going, where the future was going, they came out with their Made in China 2025 plan. And they said, we're going to focus on these 10 specific sectors. And look at how far they've come, where they focused, like on electric vehicles, where they are arguably the world's leader overall when it comes to electric vehicles, when it comes to robotics, when it comes to biotech. And now they're going to continue that model. So that gives them a great advantage. At the same time, other governments are concerned about that state power going into those sectors. And so you start to see tariff walls going up against, for example, like China's electric vehicles. And in this era of geopolitics, where you have basically, economics and national security colliding, and they're colliding where you've got investment, that's a different era that we're all going to have to adapt to.
And these tech hubs that you're describing, Steve, Shenzhen, Guangzhou in the Pearl River Delta in China, the costs and the wages, they're rising significantly there now. Do you expect rival hubs to be emerging in Bangalore in India, for instance, that can overtake those?
Well, I don't know if you'll overtake those types of hubs, but that is certainly what we saw. The innovation, in the United States used to be Silicon Valley, and then it moved to Austin, and then now, Boston, and down to South Florida. So you want to see that type of growth. You're seeing that type of growth. It used to be centered in Beijing, and now it's throughout China. And what we're also seeing coming out of the war with Iran is that countries are recognizing the need for self-reliance and self-resilience. And that means they're going to want their own technologies too. So the whole world is going to start saying, should we have our own AI? Now that can get to be very expensive. There can be a lot of risks with that. On the environmental side, where's the electricity going to come from? Where is the water going to come from? We haven't even talked about the job losses that could come from the adoption of AI. So you have in some ways the push to have more AI, more spread out, more diffuse, but then you're also going to have a counter push to that, which is what makes investing very, I don't want to use the word difficult, but makes it very challenging right now, and we all have to think different ways as we invest going forward.
So the old Chinese description may you live in interesting times. Was that a curse, do you feel, or something a bit more positive?
Well, I think it depends on your personality. I think for those of us in the investing world, we look at it as an opportunity.
Steve Okun, thank you very much.
Thank you, Yuri.